Alrighty, guys, good morning and happy Wednesday. Big day, maybe. Could be a total non-event, but we do have the Fed here today. So we'll be hearing from JP and the boys at 2 p.m. Eastern. Typically, guys, you're going to get the initial knee-jerk reaction. Then we tend to get the real reaction on Thursday. So with it being Fed day, be a little bit careful here. But, in terms of the bigger picture hasn't changed. We still have sell signals on the S&Ps. We got sell signals on the Qs. We got sell signals on the Dow Jones, the IWM. Then as we go sector to sector, XLK, big tech. Got sell signals on big tech. We got sell signals on the semis, the financials, the industrials, the transports. So nothing has changed here. It still looks like a short the bounce market. And for me, that's kind of the bigger question here. After the flush down towards major support, down towards -3 ATR, in with folks seemingly leaning a little bit short here, do we get a bounce? Maybe takes us into next week, but do we get a bounce here that I think sets up some good short entries for another flush to the downside? So in terms of can we get a bounce here, I'm going to give you guys a few levels to focus on. If we can break above the 8 EMA, and this goes to the S&Ps, the Qs, etc. But looking at the S&Ps here, if we could actually get a break and a close above the 8 EMA, I do think it opens up potential room up closer to 4,300, getting us that reversion to the mean. Now, if we can't even get above the 8, then obviously we're not going to get all the way back to the 21. But in terms of trying to work off of, like if-then statements, if we can break above the 8, then I do think we can bounce all the way back to the 21. At that point, I think with patience, we would like to look for a few shorts. But we'll see how the Fed goes today, guys. But that's how I'm looking at it right now. I want to put on shorts. I think you look at a weekly chart of the S&P futures, given that there's a giant weekly squeeze that still hasn't fired short, I think we've got plenty more room to the downside. On top of that, there's a 3-day squeeze that still hasn't fired short. And the same thing goes to the QQQ. So bigger picture-wise, I think we got more downside than I want to short the bounces. What I'm looking for here next few days or so, could we get a little bit of a short squeeze? Then I think we're getting better entries on the shorts on the S&Ps, the Qs, and pretty much everything on my bearish watch list. And in terms of trying to play the bounce, shot you guys a video early yesterday morning with the idea of the unbalanced put fly here on the SPX. So we actually went ahead and did that trade in the mastery. So we got the 40-50, 40-60, 40-40 unbalanced fly. All right, so you go to 40-50, you buy the unbalanced butterfly. We went $10 wide. And I'll show you guys this on one contract. But what's nice about this trade is you don't have any downside risk, or upside risk rather. So if the market goes up 1, 2, 3, 4, 5%, you're going to be in good shape. So right now it's going for about $1.40 a credit. We bought this for like $2.10 a credit. So it's already put, $60, $70 per contract in our pocket. But the idea here, guys, is if we can buy that fly for $2 a credit, and then on Friday we close above 40-50, this trade's going to expire worthless. So you buy it at $2 a credit, it goes to zero. We get to pocket the $200 of profit per contract. Now, in the event we don't get the pop, and then things flush and we close, somewhere near 40-50, somewhere near previous support, then there's that pinning potential where you could walk away per contract, with a $500, $600, $700 profit. But the more likely outcome here is, those 40-50 puts expire worthless, and we pocket the $2 and change. So we're working a little bit of that, and quite frankly, probably just going to hold on to that position, get through today, and then get the real reaction, so to say, tomorrow. Then we'll be looking for a few more trades. But I do want to show you guys a few additions to the bullish watch list here. Um, in the bearish watch list, is pretty self-explanatory. It's basically the whole market. So financials, industrials, transports, utilities, semiconductors, the indexes. For now, they all look like short the bounce opportunities. But in terms of the bullish watch list, ran the scans last night. We got a few names coming up here, guys. So the first one is going to be Exxon Mobil. But before I show you Exxon, we'll take a quick look here at XLE. And XLE does a pretty good job here of trying to do a little bit of cleanup. So when you lose your buy signals, you're under the 21, and then your histogram goes negative. It's kind of flirting with the idea of firing that daily squeeze short. So to see XLE trying to shift the histogram, getting back above the 21, it's all pretty good structure. And I think an interesting perspective here, for week after week after week after week, XLE is hanging out up here around +2 to +3 ATR on the weekly chart. So even though that's a good uptrend, we all know if we're up here at +2, +3 on the weekly, at some point, where are we typically going to get? At some point, we're typically going to get the pull back to the 21. Granted, it didn't last all that long, but you did kind of get that healthy reset. So I do think XLE might be trying to set up again here. And keep in mind, this has done a great job all year of kind of minding its own business and bucking the trend we've seen in the overall market. So XLE is fighting the good fight, but in terms of ExxonMobil, picture perfect. Like picture perfect. Close to it. Close to it. We've got the buy signals. We have a 3-day squeeze, a daily squeeze with the stacked EMAs. Now, the key here is that XLE has to hold up. So I think the first thing we want to see here is that day after day after day, XLE is holding above that 21. Because as goes XLE, goes the Exxons, the Chevrons, etc. So the last thing you want to see here is that old XLE starts to flush again. But I do think if that can hold structure, ExxonMobil looks good for a push into 90.92. So that is looking pretty good, guys. And then another name here along the same lines is going to be our old pal Oxy. And I do think Exxon's a little bit cleaner. But you got Oxy with the buy signals. Couple days back above 21. Histogram's not positive, but we're trying to shift. And we got the stacked DMAs and the green 10X bars. If you look at a few of the other like XLE names, they're not quite as clean. So I don't think EOG is quite as clean. This has red 10X bars. There's no stacked DMAs, no buy signals. Devon looks pretty good. I think LNG looks pretty good. So slowly but surely, big man on campus XLE is trying to shape up. And pretty much, guys, and this has kind of been the case for a while, the majority of the bullish watch list is energy oil. So it's XLE, it's Oxy, it's ExxonMobil. Then you've got UNG. Beautiful trend. Then you got USO. So the natural gas, the oil, the whole energy play, I think might still have some potential here. My only suggestion would be, if you're going to pursue, the energy names, the oil names to the upside, keep a tight leash around it. Right? Let's not forget that the rest of the market, right? So anything not energy, oil, gas, is looking pretty crappy here. And with the weekly squeeze in the S&Ps, the 3-day squeeze, etc., it certainly feels like there could be more downside. Again, I think there's a short-term pop in the cards here, but keep that in mind. This kind of structure, this kind of trend, it's a needle in the haystack kind of thing right now. So do be a little bit careful, but that is the watch list, guys. And then for a little bit of a different option here, same sector energy is going to be GTE. As you guys can see, right, a little bit out of my wheelhouse. It's a $1.70 stock. So I don't think this is going to be an options play. But Sam from the options room, he called this to my attention a few weeks ago. I bought some shares on this and caught that move into plus 2 ATR. So if you're into that kind of thing, what I'm thinking here, an exit on a close under 150 with the profit target at $2. So let's look at that trade. If we were to buy, say, 1,000 shares, right? So we're going to invest, $1,700 here. Obviously, it's probably not going to go to zero. But if we analyze that trade, let's see, GTE. Right, so you buy 1,000 shares, you invest $1,700, so that's kind of your cost of entry, right? A little bit more important is, okay, if I buy 1,000 shares, how much am I down at $1.50? And we're down $200 in comparison to how much would I make up around $2? So I got to put up the $1,700 to get into the club, but in terms of the risk reward, ideally, putting aside a huge gap down or something, we take it off under $1.50, we lose about $200. If we can catch that rip into about $2, we make about $300 in change. So there's the capital requirement. Say, okay, at $1.50, that's that is $200. So say you got a $100,000 account and you want to risk maybe 2%. Okay, then you got to come in here and buy 10,000 shares. Now you're risking your $2,000, your 2%, and you might make your 3%. So not the typical options trade. And I'll show you guys the options chain on this thing. I mean, you're not going to have much open interest, right? There's not going to be huge volume. Could you buy some $1.50 calls? Maybe. But I think if you're open-minded to buying a few shares, could be a good-looking option there, guys. Outside of that bunch, it's about it. Energy, oil, natural gas. Now, we do a quick update here on XLP, which had been looking good. Not looking too good anymore. So this is what I mean by keep your risk nice and tight. Does energy look really good? Yeah, it does, for sure. But I think healthcare also looked really good. I think the material sector, XLB, looked really good. Like you buy that dip, it looks so good. But notice how in this market we've seen plenty of good-looking stuff quickly roll over. So not to say energy is going to roll over like that, but we are in that market, guys. So a few things for your watch list. And then in terms of advice for today, might be a good day to take the dog for a walk and stay out of trouble. And remember, we're probably going to get that typical knee-jerk reaction, but the market might get a little bit funky, but then typically overnight and then into tomorrow, we'll get the real deal reaction. So be patient, guys. We've got a long month, a long year, and hopefully a long career ahead of us. So don't force the issue today. But as always, before I cut you all loose, if you got anything you want to take a look at, give it to me here in the chart. I'll take a look. Let me take a look. Hey, Terry. What's up, Terry, Sebastian, Samaj, Gene, Brad? Brad, SMH for a short around 243. Where's 243 put us? Let's see, SMH. Yeah, I'd have to agree. I'd have to agree. Now, in terms of the short side, here's where I think with our entries, you want to be a little bit flexible. Like tie it back to the S&Ps. Because I would agree, Brad, the ideal spot to short SMH, for me at least, is going to be right at 243. Because at that point, SMH has made its full reversion to the mean. What we have to keep in mind here is that the S&P 500 is a little bit more extended, or a lot more oversold than the SMH. So while the SMH might be able to pop a little bit today and touch its 21, the S&Ps have got a little bit more room here. So what I'm trying to say is, yeah, I think we can short, and I think we should look to short semis around the 21. But maybe, if anything, Brad, we scale into a trade. Maybe we give the trade plenty of time just to account for the potential that even though the semis might hit their spot, the S&Ps might have a little bit more room. And typically, as the S&Ps push, everything pushes. So I think we want a little bit of flexibility in terms of, hey, I'm going to short it here, but I might allow for it up to about 250. Give it a little bit of wiggle room. But I would agree there. Hey, good morning, Cash Max. Governor FOMO. Good morning, Governor. Yeah, I think I can't disagree there. We had a few trades here in the option zoom and the master, and we did get stopped out. Here's how I look at it, right? What did I like about it back here? I like the uptrend. I like the stacked DMAs, the green 10x bars, and the buy signals. I took a little bit of heat, but as it curts, we're in an uptrend. We're above the 21. We got stacked DMAs, we got green 10x bars, we got buy signals. So visually and emotionally, for a few days, it gets a little bit suspect there. Now it's kind of shaping up to be the same exact setup it was back there. So I'd agree. If we liked it back here, I think very much it's the same setup once again. So I got my eye on that one. And then, yep, Brad, I think you're focusing on all the good stuff here. USO. Spend a few minutes here because what I really like, pull this up a little bit, a pretty good amount of squeeze action here. 3-day, daily, 4-hour, 2-hour, 60-minute. A couple more on the 15-minute. Right, but good structure. Holds up really well throughout the overall market shenanigans. What I want to check out here, we'll check the 3-day squeeze out. I mean, you got to like that. And then if you look at the 4-hour, let me see, 4-hour, 21. Let's check the 2-hour, 21. Huh. Is that a new candle? Looks like we're gapping up here. I like it. Yeah, I like it. So we're going to open up around 79, huh? Yeah, I've got to like it. So here's what I would like to see. We're going to open up around 79 bucks. So I'll anchor to maybe the 4-hour chart, right? So this morning we're going to open up back above that 4-hour 21. What I would like to see is, can we get a little bit of a dip and then take our entry above the 4-hour 21? Because now we're jumping into a good-looking 4-hour squeeze inside of all the other squeezes. So I think you got the bigger picture trend, the bigger picture squeeze, but then under the surface, I do think this morning's pop could try to get something going. And there might be a USO play here today. You keep a close eye on that one. But I do like it. I do like it. Hey, what's up, Rocky? Good morning, Rocky. Greg, what you got, Greg? You got some Oxy? Good stuff. Yeah, and I've been doing a lot of debit spreads. Might be a great candidate, just like you said, selling the weekly premium. It's looking pretty poised here, guys. The way I look at it is, and granted, anything can happen, but they kind of had the opportunity here to completely bring this party to an end. Like, this really could have thrown in the towel and really gotten ugly. The fact that it held up so well, and now is trying to, kind of shift structure, shift momentum back in the favor of the bulls. This looking good. And Warren Buffett is buying it. So you can add that to the list of things to like about Oxy. We got Uncle Warren jumping in. So an unbalanced butterfly for the QQQ. Might be a little bit tough for Friday's expiration, um, just in terms of premium. But we can set one up. So probably go with the 310 center strike. So let's see. So again, what's the thinking here? The thinking is ideally this just trades higher into Friday and closes well above 310. The other idea is if we can't trade higher, if we do flush, then potentially we could hold up here as support. And the trade's a bust if we just roll over way under 310. So we're going to go to the May 6 options here. We are going to buy unbalanced butterfly. I think I look at $3 wide, $2 wide, play around with it. Let's go. Let's see, $2 might be a little bit too small here. Let me see. Maybe $3 wide. All right, so we'll look at this on one contract. All right, so 132. Whoa. All right. Let's let's make sure I cancel that before the open. All right, so May 6 expiration, unbalanced put fly, 313, 310 center strike, 307. So at $40 a credit, we'll kind of look at the numbers here. So max loss is $260. Max profit is $340. Again, the most likely outcome here is we trade above 310 and we collect the $40 per contract. All right, so keep that in mind. The more likely outcome is you're going to put up to $260. Like that's your cost of entry to collect your $40 of profit. But of course, if we do flush a little bit here, and then in the event we close Friday, right around that 310, that's where you could get closer to that closer to that $300 max profit. All right, and if we put it on the Analyze tab, so let's say we're going to put this on and we're going to close this tomorrow if we break under 310. Right, so if we look at tomorrow, which will be the 5th. So tomorrow, if we close under 310, we're down about $60, $70 per contract. So that's kind of the way I look at it. I'm going to risk the $60, $70 per contract to most likely just make the $40. Now, if we happen to pin Friday near 310, we might make 300, 400. So if you were looking to do that on the QQQ, that's how I'd kind of price that out. Now, depending where we open this morning, this starts to get cheaper and cheaper. So there becomes a point where, if we're only going to get, say, 20 cents a credit, trade's probably not worth it. Never putting up $300 to just probably collect the $20. So then maybe you're going out, to next week or something like that. But good question there. Hope you found that helpful. Corn, huh? How's corn looking? It's still one of the cleanest trends in the market. How's wheat looking? Tell you guys what, wheat is not looking too bad. Wheat is not looking too bad. Aaron, the fertilizers here, they'd have been looking really good. So kind of a good opportunity here to go back and see how they're shaping up. All right, so Mosaic, who else we got? Mosaic. Yeah, IPI. So for Mosaic, it kind of looks like it's I still think it's a little bit early here. Now, if you look at the weekly chart, that's a 4-hour. If you look at the weekly chart, no major issues here. I would be patient on this one. Kind of make it prove itself. Because if this falls right back under that 21 EMA, it could roll right back over. So what I would want to see here from Mosaic is let's get 2, 3, 4 closes above that daily 21. Let's, at the very least, start to see some yellow bars in the histogram. Right? A little bit of a heads up that the bearish momentum might be dying down. I'd like to see some stacked DMAs. All that saying, just make it prove itself. If this is going to continue its journey towards $80, it's going to have to prove support above that 21. I think if and when it can do that, then there might be a trade here. So patience with that one. But all right, guys, I got to jump on the mic in the options room here in 5 minutes. And as a reminder, let me go grab this for you guys real quick. Where's the training room? The training room. Hold on, y'all. I'm going to find it. Here we go. Yeah, so for those of you that don't know, we did open up our training room to the public. So, I think I'm in there for 30 minutes, 3 or 4 times per week, along with everybody else on the team. So I'll put that link in the chat, guys, and I'll be in there today looking for a few trades, 10 a.m. Central, 11 a.m. Eastern. So if you guys aren't in the free room just yet, go on ahead and sign up. Come hang out with me this afternoon. And otherwise, guys, enjoy your day. And again, try to take your dog for a few walks here ahead of the Fed. Stay out of trouble. But I'll talk to you guys soon.